All right, again. Good morning. Today is our section of the weekend, Saturday. We're going to analyze the British pound, US dollar, to see what is ahead for us next week, okay? Before that, let me bring the disclaimer. And also, if you like what you see, people, please subscribe. It's free. And these studies could be very useful for your trading journey. I am a trader. I'm doing this trade as they happen, okay? So, subscribe. Huh? All right, let's stop playing and let's get into action here. British pound, US dollar. As I told you before, the basis of our study is to look for instruments that are overbought or oversold, okay? To determine that, we use a very strong tool. It's called pivot points. These are weekly pivot points. The moment instrument go above the pivot, we're looking for sell. Why? You sell high, people, and buy where? Low. You can actually see this. Can you see it? You can actually, this monster trade here, British pound, coming down like it's hot. Can you see it? Impulse, retracement, impulse, the most important point of trading. Anything you trade will move in impulse and retracement. Regardless of any indicator you use, you must understand this and practice. If you control that, you demand. All right, what do we see? Bounce. Not only that, but if you look to your left, what is this? The all high. Impulse, retracement. Look at that. You cannot make this up. Let's do it. Let's do it. This is what I do every single day. Impulse, behind the scene, okay? This is how I made decision to take my own trades. It's called market structure. Market structure. Structure. Extractor. It's an extractor. You can make this shit up. Look at this. Boom! Can you see the movement to the downside? Now, the movement brought below this level with power. So what did that tell me? The trend is down. I already knew it's reading my lower resistance, weekly resistance, and I use the weekly and the monthly resistance. When you see that, I'm looking. When I go below this point, I already looking to buy. Now, I don't want to buy here, which you could do it, but I won't. All right. There we go. Establish new law. This is market structure. This happens in anything that have a chart. Doesn't matter what it is. Gold, silver, platinum, beans, sugarcane, coffee, anything must move in impulse and retracement. So why in the hell are you going to concentrate in anything else? Make sense? All right, let's draw our Fibonacci tool. If you look my other videos, you see how I set this up in advance, people. In advance. Advance. Let's say I already have this area waiting for me since freaking August 1. 1 month in advance, I have a reasonable expectation that this movement, well, I did not know that it's going to be that powerful to the upside. If I would have been millionaire. But I knew this is going to hit one of these areas, okay? So what are we expecting here? We're expecting a sale back, first target to the pivot, second target. People, this is this movement is about 170 feet. Let's say you signal for your software come and that's about 100 pips from here to here. All right. Then you cross half and let the other fly to the end of the movement. All right. Will it reach down there? I don't know. That's why I let it fly. I already closed half of my trade. This is what I do, all right? Okay, what else we see? I don't like to trade isolated. You are not an island. Everything affects everything, and we're going to see this now, all right? Even though I'm not talking yet about financial news, I'm not going to do a video specific for that. We are looking at the chart because we believe, traders like me, we believe that any fundamental change, it is reflected on the chart. All right, let's clean this up. We saw it's at 9, bouncing from there. Oops, Fibonacci level. My main level is here. This is how I do it. The normal expectancy is to bounce from the golden radio. And it happened enough for us to look at it. And look at that. 61, touch here, came down. It's getting in position to come on down. All right, let's clean this up. We're going to see the second element, which is projection. As a traders, we look at the past and project it to the future. Why? Because that's exactly what it does. The market is a repetition, all right? Because if we don't repeat, we won't be able to trade. Make sense? All right. What we don't know is the magnitude, you see? I knew this movement is going to repeat, and you can actually see it. Impulse, retrace, happening in the past, probably happening in the future. But I didn't know this magnitude. I didn't know this magnitude. But I can see here. Can you see it, people? There is a, I don't know if you can see what I see. You see that? The market repeat himself continuously. What we don't know is the magnitude. That's why we have these lines that telling us if everything goes all right, the market should reach here and come back down. All right? Now, let's see this from another angle. I use a very nice tool that uses statistic standard deviation. It's called the polynomial channel. Boom! What the polynomial channel does is take information from the back, and you see this line projected to the future. All right? Here we can see how it captured the top. I already knew or have an expectation that this is going to go down. It's already reaching a critical area. So at this point, I told my robot, sail, sail. And look how beautiful this trade is. I always come out in some, I think I came out down here. I don't remember. So we can see now that I picked up this one. This is standard deviation. I'm just going to use, I always use a standard deviation 3 levels. If you don't know what standard deviation is, study it, look it up, and you will see that these are very, very powerful lines, okay? Standard deviation normally is 1, 2, 3. I use 2.6 and 3.6 because you have to adapt the standard deviation to what you do. I'm looking at price. I have to adapt it to price. Okay? My wife is a technician, a lab technician. She said, yeah, we use a standard deviation in some cases to identify certain sickness and things like that and happen in certain population. These are real, people. You know the thing with the hurricanes now? Something like this. You see the current of uncertainty, and it had 2 deviations, or maybe 3, I'm not sure. It had to be adapted to what they do, so I adapted to it, and they put this round thing at the end, but I believe it's something around here that they use, all right? Let me take a sip of coffee here. So you are not an island, even though I live in Long Island. Let me say this template to do this projection. Default. Okay. Let's see a concept using trade is called correlation. Currency that are based in dollar to see if they're moving in the same way. Euro, come on down, almost identical. Australian, going down. New Zealand, going down. Reverse correlation. Franco, whoop. All right, as you can see now, we have a larger view of what's going on. We see that phenomenon with the dollar. We see that most currency based on dollars are going down. Who else? Canadian. What is it? Inverse correlation. US dollar, Japanese yen, also inverse correlation. So we can see that what we're reading is not in the vacuum. It's a reason for this movement to happen. And I believe 100% that the British pound is going down, baby. All right, guys, this is our analysis for the end of the week, Saturday. We expecting to see the British pound to come on down. Bye.